Should I buy a car in my company? It's honestly one of the most commonly asked questions I get, whether it's at a family barbecue or from clients. So in today's video, I'm going to take you through everything you need to know so that you know if you should buy your car in your company or just buy it in your personal name and maybe leave it out of the business. So without further ado, should you buy your car in your company? Well, the answer, like most answers in tax, is it depends. And I'm going to give you 3 questions that are going to help you decide and give you a framework around whether you should buy your car in your company. And the first thing is this: what type of car are you buying? And the reason for that is it may attract different taxes such as FBT, GST, income tax, all have different implications depending on which car you buy. For example, are you buying a ute or a commercial vehicle with carrying capacity of over 1 ton? They have different rules. Are you buying an electric vehicle? There are some certain FBT exemptions or Fringe Benefits Tax exemptions that you can get that make buying an electric vehicle in your company more lucrative or suitable to you. Or are you buying the latest C63 AMG so you can do, your burnouts out there? Probably not the best idea to buy that one in your company, but we'll discuss it further in this video. So number 1, depends on what type of vehicle you are buying. Number 2, what are you using your car for? Are you using that car to pick up your kids from school and drop them back off? Are you using that car to go on holidays with or do more personal things? Or are you using that car in your company? So for example, you might be buying a ute in your company, you're gonna have tools and equipment, you're gonna go take out to job sites and do all those sorts of things. So basically, are you using the car for more personal things or are you using the car for more business things? That will also have a huge bearing on how you buy your car and whether you should buy in the company or not. And number 3, is it the best use of your company's funds? So a lot of people just think, especially growing up in Western Sydney, it was always very much, you just buy your car in your company and you write it off, you get a tax write-off, insert the write-off people line, which I'm sure you've seen. But is it the best use of your company's funds? Are you just buying a car to save money on tax, or are you using that money to invest in your business because it's a commercial vehicle that you know you're gonna get value out of, and you need cars or you need commercial vehicles to operate and run your business because you're on the road a lot, you have salespeople that are on the road a lot. So all those sorts of questions. What is the car going to be used for? Is it the best use of your money? And what type of vehicle are you buying? Are the 3 questions I would consider. Once you've considered all 3 of those questions, you then have to look at 3 main taxes that are going to implicate you buying your car in your company. So number 1 is income tax, number 2 is GST, and number 3 is Fringe Benefits Tax or FBT. And I'm going to run through what these are and then a few examples of types of cars and how it affects each of these taxes. So number 1, income tax. How does income tax affect buying a car in the company? Well, it does in the following ways. Number 1, when you buy a vehicle under your company, you get to claim that vehicle as a tax deduction to the percentage that it is used for business activity. You are limited in the upper limit of how much you can claim as a tax deduction. It sits somewhere around the $60,000 mark, and it's called the car depreciation limit. So if you buy a car, you can depreciate up to a certain limit. Every dollar above that limit does not have any income tax advantage to you. So depending on whether you're buying a really expensive car or a more reasonable car, you may be breaching that depreciation limit, and anything above that is just a luxury. You're not getting a tax advantage out of it. So the first thing you need to consider is what price point is the vehicle, because there is a depreciation limit. Now, I talked about depreciation. What is depreciation? When you buy a vehicle, that vehicle, according to the ATO, is going to last for 8 years. Therefore, you must depreciate the vehicle over 8 years, and you don't actually get the full expensing of that vehicle in year 1. You actually have to depreciate that over 8 years generally. However, every year, the depreciation limit changes and the instant asset write-off limit changes. So in certain years, for example, in the current 2025 year, any vehicle or any asset you purchase for less than $20,000 can be immediately deducted. However, in 2025, car prices, it's hard to find a car under $20,000. So most vehicles you're buying have to be depreciated for an 8-year period, and you basically get 1/8 of your cost of your vehicle over that time horizon. In years gone by, the depreciation limit has been more, and every year it changes, so check in with your accountant, but you have to consider what is the asset limit, how much can you depreciate, and what's the instant asset write-off for that year. The final thing I want to say on income tax is I said that motor vehicles have a depreciation limit. However, there are some cars that the ATO does not consider a motor vehicle. Specifically, anything that has a carrying capacity of over 1 ton or can carry more than 9 passengers is actually not considered considered a motor vehicle according to the ATO guidelines. So for example, if you're buying a truck, that does not have to abide by the depreciation limit. You may actually be able to depreciate the full amount of the truck still over an 8-year period, but you might not be subject to that depreciation limit. So that may help you as well. Now, the second tax you want to consider is GST, goods and services tax. The way this works is if you are buying your vehicle from a private seller who is not registered for GST, you will not be able to claim any GST credits on the purchase of your vehicle. However, if you are buying your vehicle from a dealer or another business owner who does have an ABN, most of the time that vehicle will come with GST credits. So let's say you buy a vehicle for $50,000, there is 1/11 of that vehicle price that is GST. So you actually get those GST credits refunded back to you on your next business activity statement you lodge. It's important to consider when you're buying a car and whether you're buying that from a private seller or a commercial dealer or another business, and you may be able to get some GST credits back. Now, similar to the depreciation limit, the GST limit also applies. So it's generally 1/11 of the depreciation limit is how much the upper limit of GST you're allowed to claim back is. So it's important you consider that. But basically, if you buy a vehicle, you will get 10% or 1/11 of the purchase price refunded back to you on your BAS. Just make sure you have the appropriate documentation and records. Now, the third tax I want to talk to you about is fringe benefits tax. Back in the day, the employers were getting a bit tricky with the ATO and saying, hey, look, instead of me paying you, my wonderful employee, a salary and you having to pay tax on that, what I'll do is instead of paying you a salary, I'll buy you a car, I'll pay for your kids' private school fees, I'll pay for your home loan, I'll do all these sorts of things. And it was never captured under income tax law until the ATO got a hold of it and they implemented this thing called fringe benefits tax, which is a tax on any benefit that you are receiving as an employee. And so the employer actually has to pay top marginal rate on those benefits that you're receiving. So that's what fringe benefit tax is. How does it apply to motor vehicles? Well, if you are buying a motor vehicle, there may be mixed use of that vehicle. So you might be buying the vehicle in your company, but you might have a 20% private use or a 30% private use of that vehicle. Well, it's important to understand that you are actually exposed to fringe benefits tax on that amount that is used at a private perspective. There are ways to mitigate this and resolve some of this, and that is by doing a fringe benefits tax return or putting in employee contributions or both. So it's important you manage your fringe benefits tax. Now, there are also certain vehicles that are exempt for fringe benefits tax. For example, we mentioned electric cars earlier. So if you're buying a vehicle in your company and it's an electric vehicle under the luxury car tax limit, you may be able to buy that vehicle in your company and get a full fringe benefit tax exemption for that vehicle, meaning you could use that vehicle as much privately as you would like and still get a fringe benefit tax exemption as long as you bought that car in the company. There are a few other conditions. It needs to have never paid luxury car tax on it. It's a beast in itself, but you can do a quick Google or ask your accountant about that. So there are certain exemptions with fringe benefit tax that are important to realize when you're buying a car in your company. Now, the final thing I want to mention when you're thinking about buying a car in your company is accurate record keeping. It's really important that you do two things when you're buying this car. Number one is you document the transaction, you keep receipts, you keep good records, and you have all of the documentation. Why? Because when you're buying a car in your company, you're going to be making a GST claim, you're going to be making potentially an income tax claim. It's going to be bigger than usual, so you want to make sure you have the appropriate documentation, receipts and records in place. Number two is I need you to keep a motor vehicle logbook to maintain your business use percentage of that vehicle. I've talked a lot about you can claim part of it in your company, and there might be a private use percentage. Basically, you need to keep a logbook for a 12-week period, and that's good for 5 years, to give you an indication of what percentage of the time that vehicle is used for business purposes versus private purposes. Once you've got that logbook, as long as not much changes in the 5-year period, you can keep it for 5 years. Basically, you're tracking all your kilometers for 12 weeks, starting, closing odometers, and then tracking what business use percentage and what's the private use percentage. We actually have a motor vehicle logbook template, so if you want, you can download that in the link in the description, or you can just give a quick Google and make your own logbook up, that's fine. Now, with all that being said, let's run a few examples of common scenarios I hear when people are looking to buy a car in their company. So number one is tradie wants to buy a ute. It's got a carrying capacity of more than 1 ton, and they want to buy it in their business because they need to go out to various sites. They have staff that need to go out to various sites and all that sort of thing. So I'm going to run through each of these scenarios. Number one, what kind of car is it? It's a ute. Number two, do we need it? Yes, we need it. It's got a great commercial use, and if we get it, we're going to expand our business and get a better ROI for our business. So we really need it. And number three, it's going to be used commercially. It's not going to be used much in a private setting. We run it through the income tax. Okay, if it's a ute that has a carrying capacity of more than 1 ton, well, great. We don't actually have a motor vehicle limit, so we can depreciate the full amount of that vehicle over an 8-year period. It cost us more than $20,000, so we can't just write it off. We buy that ute and we claim 1/8 of it over an 8-year period. We also have bought that vehicle from a dealer, so we're also allowed to claim the GST credits on that vehicle. We don't even need to use the GST limit because it is motor vehicle as defined by the ATO. It's a more commercial vehicle. So we can claim the full GST credits on that vehicle. Say we bought that vehicle for $75,000. We claim 1/8 of it for income tax and the other $8,000 of GST credits, circa 1/11th, we get to claim as we go as well. We claim that on our next BAS when we purchase that vehicle. And the third thing, FBT, guess what? The commercial vehicle is fringe benefits tax exempt because it's not a car and we don't use it at a private setting. So it's fully exempt as long as we have some necessary documentation to make sure we've at least considered FBT and have put some things in place. So that's a great example of where you should definitely buy a car in your company. Obviously speak to your accountant. None of this is legal advice, but if that was my client, I would probably be advising them to buy that car in their company. Let's run through another scenario. A professional wanting to buy an electric vehicle. Should they buy that car in their company? Absolutely. Very similar to, I always say that electric vehicle is the professional's equivalent nowadays to the tradie's commercial vehicle. So we buy that electric vehicle, we put it in our company. For income tax, it's still capped to that limit. So we have a depreciation limit we have to abide by. So we take it right up to that depreciation limit and we claim it over 8 years. We get our GST credits because generally electric vehicles are newer and we're buying those from a dealer. So we get our GST credits up to the GST limit. And then the third thing is for FBT, they're exempt. So we've ticked off all the boxes. That is a great purchase in the company scenario. What about we talk about the latest AMG? And so the latest AMG is that, let's say the vehicle's worth 200 grand. It's a brand new schmickest AMG and it's worth $200,000. Well, should I buy that in my company? Answer is a little bit different. Number one, the income tax depreciation limit hovers around $60,000. So we have in excess of $140,000 that's just gonna sit in our company that I can't use as a tax deduction that I've just blown for the fact of I just wanted this luxury car basically in my company. So we've got a lot of dead money and dead deductions sitting in our company. Number two is similar, the GST credits. We can only claim the first roughly $6,000 of GST credits. So again, the $200,000, $20,000 of GST is a bit useless to us. Again, that just sits in our company, absolute dead money. And number three, the fringe benefits tax on that vehicle will be really high. Why? Because the way fringe benefits taxes work is calculated. It taxes the depreciation, deemed interest of that vehicle as well, both of which will be super high. So you're not going to get a great fringe benefits tax outcome. It actually may work out quite adverse for you. So would I buy that in my company? I'm very much less inclined to. The other thing is, honestly, it's absolute audit bait having that luxury vehicle or having some sort of supercar sitting in your company. It's not something I want. Also, the company was set up to take a bit of risk away from us as a business owner. Do I want valuable assets sitting in that company, such as a supercar or some sort of really expensive car? Probably not. So if you're buying a luxury, super luxury car, it may not be the best decision to buy that in your company. Speak to your accountant. And the fourth example, which is quite a common scenario I also see, is let's say you're buying a SUV in your company and that's going to be mixed use. So there's going to be some business use percentage to that. There's going to be some private use percentage to that. Should you buy that type of vehicle in your company? The answer is it depends. Generally, my rule of thumb is if it's more business related than it is private, I'd be inclined to put it in my company. But if you're buying a car that is really just for private use, it might be, your partner's car to take the kids around. It might be whatever it is. You might already have a commercial vehicle that you're using in the business and have some sort of private car. If it's more private, I'm probably not buying it in my company. If it's less private and more business, I'm probably putting it in my company. And just to touch on those three taxes, income tax, you need to keep a logbook to maintain the business use percentage and claim or back out that private use percentage to make sure that your client. So number one, from an income tax perspective on a mixed use vehicle, still subject to the limit, but if it's below that limit, then you're going to get full income tax benefit out of it. So let's say that family car's worth $50,000, definitely under that limit, you can claim the full amount. You're not going to have a dead item sitting on your balance sheet. Is it private use? You would have a business use percentage and get that private use out. So that will also make you compliant from an FBT perspective because you're contributing back or you're taking care of that small fringe benefit tax scenario where it's mixed use. GST as well, you can only claim obviously up to the business use percentage for GST. So that's something you need to consider in there as well. But if it's more business than personal, it's still going to be beneficial to you. You can do it all with pre-tax money. It's not a bad idea. With all that being said, should you buy a car in your company? I've probably given you more questions to think about than answers, but it's really important that you consider each of these different items. What car are you buying? What's it for? Have you considered GST, income tax, FBT? So it's a really good question to ask your accountant and make sure you get answers for your specific scenario, because not every car is the same and not every tax is the same. So should you buy a company, ask your accountant, get a proper answer. Don't just rely on Bob at the bar to tell you what to do. With all that being said, I hope you've enjoyed the video. If you have, give it a like, subscribe. We're hoping to put out more videos like this to help you answer all these common tax questions and get more value out of our YouTube channel. And if you have any comments or questions you'd like to answer about tax, drop them in the comments and we'll use this as content for our next video. I look forward to seeing you then.